Hi, this is Ian Coleman and this is this week's video analysis for the FX majors going into the week 15th of October 2018. Now we continue to see intraday volatility, mixed volatile price action. This is quite common in corrective formations, and that's basically what we believe we're in at the moment. We are, we have seen some dollar strength. We've then seen a bit of dollar selling late on Friday. Expect this to continue while we're in this corrective formation. So what we're going to do is we're going to break down the time frame to highlight what we believe is happening within these FX majors, and also look for some confluence areas. We're going to look at our bespoke support and resistance levels, and basically trying to decipher what we're expecting to see this week. So we're starting off with euro dollar. Now we've seen an impulse move to the downside, Elliott wave formation, 1, 2, 3, 4, and then down in 5. Normally, after an impulsive 5-wave sequence, we get a corrective, choppy 3-wave pattern to the upside in this case. Sometimes in what we call an AB equals CD formation. So basically this would be the AB leg, this would be BC, and then if we move that over to there, that equals the AB leg, so basically AB equals CD. And that takes us up to 119.28, which is the 50% pullback level of this strong sell-off. If we pull the chart back a bit, we can also see that area was quite pivotal in 2017. So quite a strong area to focus on for a medium-term turn again to the downside. Shorter time frames are highlighting scope for a mild sell-off at the beginning of next week, but our medium-term focus is still to the upside. We've got Euro CPI on Wednesday. That could be the catalyst. We could see some sideward price action until those figures. Euro dollar 4-hour chart. The scope here to make a reverse head and shoulders, so this being the left shoulder, this being the head, and then coming down to form this right shoulder. The reason I've highlighted this level here, which is 115.66, is because we did see a stalling in price action there on Friday. It was our support level. It now becomes our resistance level. And like I say, price action to the upside was capped. So AB, CD taking us down towards 115, the figure, which is 61.8% pullback level. There's then 114.91. And then trendline support at 114.83. So this zone, as far as we're concerned, is quite a good buy zone for medium-term players for a stronger move to the upside. Sterling dollar, we're still long in cable at 130.55. Going to monitor price action at the beginning of next week to see whether or not we're going to hold that position. Might pull the stop into entry. We're going to monitor price action early next week. We've got the EU Brexit Summit Wednesday and Thursday. Obviously expect some volatility, maybe some news bombs coming out of there. But our medium-term focus, again, is still to the upside. The channel top did cap some buying on latter end of last week. That is a mild concern because, again, this could be a head and shoulders. So left shoulder, head, and this is potentially form the right shoulder, but an AB equals CD formation takes us up to 135.43, and we've got the 50% pullback level at 135.19. The reason I say but is because normally, especially the first leg, and we've got to remember we're taking this high from sort of multi-year highs here at 143.76. Normally you get more of a correction to the upside. It's very rare that you'd see a correction to 38.2 on the first leg. So the bias is still mildly bullish, but like I said, it needs some monitoring at the beginning of next week. Plus Euro Sterling is still looking quite bearish, and that should give us sterling strength. If we go to a shorter time frame, let's just look at this one. This was the wedge formation. It hit the target of the wedge formation, but it's formed this bearish outside day on Friday, which sometimes highlights the top of a trend. So again, a few warning signs. Bespoke support is located at 130.69 next week, so we're going to monitor that area quite intensely, if you like, to see whether or not we stall and continue the move higher. Remember, these corrective formations will not be impulsive. There will be choppy, there will be volatile. You will get sudden moves in different directions. You won't normally see many 5-wave patterns. And here, 1, 2, 3, that is common in a corrective formation. 1, 2, 3, that again is common in a corrective formation. We could even see 1, 2, 3 in a corrective formation. So 3, 3 and 3. Sometimes these ABCD formations, sometimes they're 5, 3, 5, sometimes they're 3, 5, 3, sometimes they're 3, 3, 3. Do you see what I mean? So it's quite hard to analyze these patterns as we move higher, hopefully, in cable. Now, dollar Swiss, we spoke about this one quite in depth last week. This is what could potentially happen. We've had a doji style candle posted last week, which isn't favourable for price action. If we go to the shorter time frame, I'm going to show you this one, which is the 2-hour chart. We can see a 5-wave impulse move to the upside, stalled just short of 261.8%. I think there's scope for some dollar buying at the beginning of next week. The figure is obviously a formidable barrier. An ABCD formation would take us up towards a previous area of resistance. I think that's quite a good area again to potentially get short. To the downside, we've got support at 98.09. Now, the reason why I believe that we're going to see some maybe sideways price action for a limited period of time at least is because if we look to the crosses, they still look quite bullish. This is the daily chart on Euro Swiss. We've got bespoke resistance at 115.50, and then we've got a 261.8% here, a 116.02, and that's also a 78.6% pullback level. So potential target area, some more upside. Now, is that going to be caused by Euro strength or Swiss weakness? Obviously, over the long term, we're looking at Euro strength, but over the short term, it could be Swiss weakness. So we could see a bit more of a move to the upside in dollar Swiss, and also sterling Swiss. We did post a bearish outside day. Don't really see any relevance apart from this sort of congestion area. Bespoke resistance at 132.94, 261.8% at 132.27. So again, we prefer this to be sterling strength than Swiss weakness, but at least at the beginning of next week, if this does continue to move to the upside, then it could be Swiss weakness. Dollar yen, evening doji star formation posted, often seen at the top of a trend. FOMC minutes on Wednesday, I'd expect some volatile corrective price action probably until that point. This is quite pivotal. If we look here, 112.97, it's going to be very close to the Marabuzo level from last week. It's also a big figure, and it's also a swing high from here. If we go into shorter time frames, I'm trying to forget which chart I'm on actually, this one here, dollar yen, impulse wave pattern to the downside, so 1, 2, 3, 4, down in 5, actually spiked through the 5th, but we have seen some bullish divergence here. I think we've now got potential for a reverse head and shoulders pattern, a break here, which is 112.45, and an ABCD formation, measured move formation, takes us up towards 113.10. That's close to reverse trendline resistance at 113.03. We've got bespoke resistance at 112.96. Now, could well spike through that bespoke resistance, because that's actually a daily resistance level. And what that basically means is that it could push through it, but as long as it closes below it, then that daily resistance level is still alive. Also between the 38.2 and 50% pullback level. So it could even push up to here. But the immediate bias is bullish. But again, it's a corrective formation. Expect price action to be pretty mixed and volatile. Dollar CAD really struggled with this pair. Going back to fibs. So let's just pull that down. Wave 1, very small. Wave 2, can't really see a 3 and 4 here, it even overlaps. But the most important thing, I suppose, is the 261.8% extension level at 130.57. We've got an outside bar posted at the high. Rallies are now being sold into. For us, the medium-term bias is now mixed. Intraday, we've got to be looking at buying dips because this is a potential 5-wave pattern. So the move to the downside should be corrective. 129.71 is first support, followed by 129.26. This is an area of importance, obviously, and then channel base, which comes in at 128.69, could then form a bullish reverse head and shoulders pattern. So left shoulder, neckline here, head comes down to form the right shoulder, and then a move to the upside. At the moment, like I say, medium-term bias is mixed. Intraday, we've got to be looking at buying dips in dollar CAD. Aussie dollar, now we've got the RBA minutes on Tuesday. Would expect some consolidation on Monday. Even if we do get an impulse move to the upside, we've got a lot of barriers up here. If we look back on the chart, we can see it's been quite a pivotal area. We've got bespoke resistance at 72.59, and then let's have a look with charts. 72.59 and then 72.74. So, and again, these are daily barriers, so there's potential for a spike through. So I think what we might get is we could see this as the head again, left shoulder, move higher, hit this area, congestion area, then move lower, and then get the impulse move to the upside. At the moment, again, medium-term bias is pretty mixed until we do see a sustained or a decent reversal formation for Aussie dollar. Euro sterling, 5-wave impulse move to the upside. Let's go back to the big picture, because I do believe that is the end of the corrective move higher. So it was up, that was that 5-wave move, okay, up to the 61.8% pullback level around about 90.45. We broke that channel to the downside. Now reverse trendline resistance comes in at 88.72. If we go back to this chart, and I don't think we're going to push that high, we've reacted close to the 78.6% pullback level of this wave formation. We are starting to move higher. We've got reverse trendline resistance here at 88.16, and we've got our bespoke resistance at 88.16. So again, I think limited buying at the beginning of next week, but we've got a lot of figures out. We've got a lot of news bombs. We've got CPI. We've got the Brexit meeting on Wednesday and Thursday. So again, the immediate bias. We've actually cashed in our long-term sell trade that we had on last week. So our medium-term bias is slightly mixed, but intraday we're going to be looking at selling into rallies around about this 88 to 18 area next week. Euro yen, is this a 5-wave pattern? Well, if it is, it's pretty messy. 1, 2, 3, 4, again an overlap, and then down in 5. Could this be seen as 3, 4? I don't really like it. What I do like is the potential of a head and shoulders formation. So left shoulder, head, right shoulder. We tried to buy a dip. Well, we did buy a dip late on Friday on the intraday trade. A measured move target. So basically we take the length from the head to the neckline. We then project it from where we believe the break line will be, and we move that up to the upside. So again, an AB equals CD. It's not really CD because it's not lower, if you see what I mean. It's just a projection. Measured move target is located at 131.76. We've got 61.8% pullback level of the last sell-off at 131.63. So intraday, We've got support at 129.60. We did close above that. It was actually a weekly support. We closed above that barely, but we did close above it. So that keeps that weekly signal alive. I believe that if we break that neckline, then we should get a stronger, at least correction to the upside. And I've highlighted this area, obviously been quite pivotal. If we look back here, it was again resistance, support, support, resistance, etc. Okay, I hope you find that educational, and we look forward to speaking to you next week. Have a great week. Thank you very much.